Breaking news out of Wall Street, and Tesla investors are not happy right now. Elon Musk has just registered a staggering 304 million Tesla shares, and the market is responding exactly the way you'd expect, with a sharp and immediate sell-off that is sending shockwaves through the electric vehicle giant's stock price. Let's break this down, because the numbers here are absolutely jaw-dropping. 304 million shares. Let that sink in for a moment. We're not talking about a routine filing. We're not talking about a minor administrative update. This is a massive share registration that immediately triggered alarm bells across trading floors and among retail investors who have poured billions of dollars of trust and capital into Tesla over the years. The moment this news hit the wires, Tesla's stock began sinking, and traders scrambled to figure out exactly what this means for the company's valuation and their own portfolios. Now, here's the context you need to understand. When a major insider registers shares at this scale, the market interprets it in a very specific way. It raises the specter of potential dilution, or the possibility that those shares could eventually make their way into the open market. Even if there's a completely legitimate, procedural reason behind the filing, Wall Street doesn't wait around for explanations. Wall Street reacts first and asks questions later, and that's precisely what we're seeing play out in real time right now. Elon Musk, of course, is no stranger to moving markets with his actions, his words, and yes, his regulatory filings. This is a man who has sent his own company's stock and the broader crypto market into tailspins with a single tweet. But this situation is different. This isn't a tweet. This is a formal Securities and Exchange Commission registration, a legal document that carries real weight, real implications, and real consequences for every single person holding Tesla shares today. Think about what Tesla has been through over the past couple of years. The company has faced mounting competition from Chinese EV manufacturers, questions about demand softness, ongoing scrutiny of Musk's divided attention between Tesla, SpaceX, X formerly Twitter, and now his involvement in political circles through his role advising the federal government. Investors have been navigating a genuinely turbulent landscape, and news like this registration does absolutely nothing to calm those nerves. The critical question every analyst on Wall Street is now asking is straightforward: what is Musk planning to do with 304 million registered shares? Is this connected to compensation packages? Could it be tied to options that were previously awarded? Is there a strategic move on the horizon that requires this level of share activity? Right now, the answers are not fully clear, and that uncertainty is precisely what's fueling the stock's decline. Markets hate uncertainty more than they hate bad news, and ambiguity at this scale is enough to shake even the most loyal Tesla bull. Tesla has had an enormous and passionate retail investor base, people who believe not just in the company but in the vision Musk has sold them for over a decade. Autonomous vehicles, Robotaxis, the Optimus humanoid robot, full self-driving technology. The Tesla story has always been about the future. But futures are priced on trust, and every time a filing like this emerges without immediate clarity, that trust takes a measurable hit. Institutional investors are watching closely. Hedge funds are recalculating their positions. And millions of everyday investors are checking their brokerage apps right now, wondering whether to hold, whether to buy the dip, or whether this is the moment they've been quietly dreading. One thing is absolutely certain: the era of Tesla simply being an electric car company is long gone. It is now one of the most politically charged, personality-driven, and volatile investment stories in modern financial history. The real question isn't what Musk registered today, it's what he's planning for tomorrow.